Before I show you how the news strategy actually works, how you can make money from it, what is very important is that you actually know what news I'm talking about. So there's only 3 news releases that I'm talking about. There is US CPI, which measures inflation. There is US NFP, which measures employment. And there is FOMC, which is just interest rates decisions. So when do these come out? This is where you will use Forex Fraction Financial Juice. It will tell you exactly when these come out. CPI comes out at 1:30, NFP comes out at 1:30, and FOMC actually comes out at 7 p.m. So it's late on in the session, but you can still make money from it. NFP is the first Friday of the month, and then these two, it can be at any point in the month. They do it 10 times a year for these right here. So these are the actual 3 that you can make money from, and these are what all the examples are on. CPI is actually the best. But the other 3, they all move in exactly the same strategy, the same way, exactly how I'm going to show you how the banks actually move it. So these are the 3. And what matters about the data release is how the actual data compares to the forecasted data. So for each of these 3, there's a consensus of what the banks think the data will be. And then once the news is released, they'll see how it compares to the consensus. So for CPI inflation, if the actual data, the actual inflation is higher than the consensus, the forecast, it's bullish for precious metals because it's bad for the dollar. So dollar, precious metals, they're inversely correlated. So if it's bad for the dollar, it's good for gold and silver. And if it's good for the dollar, it's bad for gold and silver. And then the actual inflation, if it's lower than the consensus, so the consensus, they predicted higher inflation and the actual data is lower, that's good for the dollar, so it's bad for precious metals, so it's bad for silver and gold. Now for NFP, if the actual number is higher than the forecast, it's good for the US dollar because this means there's more jobs in the market. So it's bearish for precious metals, so it's bearish for gold and silver. So we're looking for sells on that, it should drop. If the actual is lower than the forecast or the consensus, it's bullish for gold and silver. So if there's less jobs in the market, that is bad for the dollar and it's good for gold and silver. Now interest rates, lower interest rates are bullish for precious metals. Higher interest rates are bearish for precious metals. Now it says here it's released at 7, so we don't trade this. That's what I used to think, but then I actually traded it for many times in a row and it's very much tradable. It's just whether you want to sit there at the end of the day or not. But it is very much tradable, so ignore that bit down there. So these are the 3 data releases that we can actually trade this strategy on. Now I'm going to tell you the strategy, and I've told you how the actual compares to the forecast. Now you're going to see how this works on the chart.